Good morning, lovely people. Here we are at the Seed episode 3, and I'm joined with Mads and Maya. Now, the point of the Seed is to talk about European venture, the startup ecosystem, and all the things that have been on our mind from the week. So we have a whole bunch of topics. Maya, Mads, and myself have brain dumped a whole bunch of topics, and we're going to jump around. We're going to bounce around. But before we start, Maya, can you give us the 20 seconds of you? You are a go-to-market girl. So to Mads and myself, you are magic fairy dust, and you're a wonderful author. But give us the 20 seconds of you, if that's okay.
Oh, thank you so much. I'm just here to collect smart insights from VC guys, but hope to participate a little bit of GTM wisdom as well. So when you are going to market, I mean, people get very overwhelmed, right? There are a gazillion channels, which price to set, which audience to focus on. And I'm kind of working on reverse engineering the successful methodology for different business types. And this year I'm on a mission to help 10,000 entrepreneurs to cross the chasm. How cool is that?
Wonderful, thanks, Maya. And Mads, intro yourself, because we got told off last week for not doing a little intro of ourselves. So Mads, do you want to just give us the bit of you?
We back technical founders and help them build good startups.
Boom. Right, well, let's crack straight on. Mads, you're first up. SPACs are back, baby. SPACs are back. What's happening?
Well, what's happening is that there are more than 1,300 unicorns out there, and some of them are not very good companies, but actually some of them are decent businesses that are not going public and that are struggling to go public for many reasons. But one of the key reasons is that the investments that were done into the companies, the valuations were too high. They're too much of a liquidation preference overhang, and so it's just hard to find a price that clears the market. Where you can take that company public without people losing out. And so you've got this tug of war where for the founders it would be good for the company to go public, for investors it might not be, or vice versa. So lots of battles, and so. SPACs they were popular once upon a time. A lot of them failed. But it looks like some of them are back. So since June, 20 new SPACs have filed for IPO, targeting more than $4 billion in new capital, which is more than twice as much as in all of the second half last year. So these are still just targets, but the market seems to be getting momentum. The idea is quite powerful. The idea is basically that you can use the SPAC to help take a company public. And if you have the SPAC ready, if you have the capital ready to go, that might create a dynamic where it's attractive for boards to basically say, look, the money is there. We can go public easily. We can overcome some of this battle and the work that goes into taking the company public. We can clear the preference stack, and we can get this company out there so it can start to become an independent business and not worry about sort of being in this netherworld of not being able to raise more money and not being able to go public either.
Listen, Maya, we had a chat in the week, and we were talking about investing as gambling. What was on your mind? Because we were talking about crypto, and I was roasting you about crypto. But what was on your mind when we were talking about what is investing? Is investing gambling?
Okay, cool. So coming from my background, it's just like, things happen in life. And you have both been working as founders before you went into the VC game, right? But I was working in crypto. So we have like this rule that you can only invest as much as you can lose. And, it's more of not say a gambling machine, but you do play around a little bit because in that environment, it's impossible to make any sort of rational decision. So it's not like daily trading. And I mean, we had this conversation very specifically about this use case that I'm tackling right now. So one of the teams from Silicon Valley invited me to be their advisor, and I panicked message our WhatsApp group, guys, I have never done anything other than that, like European jurisdiction. What should I ask here in this case? And this is how then gave me like really tangible and really good advice of what I should be watching in this case, because my initial logic was just like, okay, cool, maybe I can spend like 5 hours a week working with this team, and if they happen to be a unicorn, I'll buy another house. Cool. It was not very, very intentional. It was not very rational. Therefore, I just like voice texted to Dan, like, am I investing here or am I gambling?
Yeah, I know, Mads. You always get upset with me when I call it what we do gambling, and you very clearly articulate the difference. How would you share what we do is and how it's different from gambling?
But one way to think about it is to think about this idea of expected return. So if you do the same thing, if you make the same bet 100 times or 1,000 times or 1,000,000 times, do you expect to make money or not? And if you go into a casino and you play the roulette 1,000 times, you're expected to lose money, and that's why it's gambling. And that's the same with the lottery, and that's the same with a lot of things. So the expected return is lower than what would be required to make a profit. Whereas if you're investing and you have an edge, any sort of edge, then you're expected to make a profit. And so in venture capital, the three main sources of you getting an edge is you can be very good at sourcing, you can be very good at selecting investments, you can be very good at supporting them. And hopefully you'll have an element of all three. And if you have an edge in those three things, you're expected to make a profit. And that's why we think of it as investing rather than gambling. Crypto, it looks like gambling to me because it doesn't look like you're really investing with an edge. Maybe unless you are an insider that knows a specific crypto coin or a specific, asset better than others. You have some sort of insider information. But if you don't have an edge, it's really just gambling. And so for me, that's a pretty clear distinction between the two.
Okay, we are running some serious financial analysis ourselves as well, but no pun taken. But there is something that I would love to argue with you guys. That's the potential gain, right? So in high risk environments, we can anticipate higher returns. And if you just disperse your portfolio in an educated manner, of course. And this happens in company investing as well, right? Because if you have just this feeling that something is going to be the next big thing, right? So you said that you are investing in founders before. And where is this, let's say, intangible added value in the rationale that you just explained right now?
Are you talking about specifically with crypto compared to crypto?
No. It's just this intangible added value, right? So Mats was talking about, let's say, predictable investments, but sometimes you have to shoot for a moonshot. You have to have this, I know it and nobody else really can provide me this evidence. Is that gambling or is that following your guts?
What a question.
Yeah, I think we do that all the time. If you just do one, it's just, right, you might win, you might lose. I mean, a lot of venture investments don't return capital. The question is, what happens if you do the same investment, the same bet 50 times, 100 times? Then are you expected, on average, to make money over that number of investments? And if you are, I think that's investing if you have some sort of edge. But yeah, a lot of it's gut feel. A lot of it is you in your gut, in the netherworld of your brain, synthesizing all your experience, all your insight in markets, all your understanding of people. And then, of course, coupled with all the DD and all the other stuff you do to try and gain a picture of, could this become a really big thing? And even when you do all of that, it might still not work out. And that's why you should never make just one or two or three investments. You have to make many investments. Because then over a portfolio, if every single investment has a probability that's bigger than 51, or the expected payback is better than the money you put in, then you're going to make money over time. But it's a lot about constructing that portfolio right.
We're kind of moving on in the same point. We'll talk about public markets. So there have been a couple of very positive signals for the UK and a couple of very difficult days for the American public market. So staying with the UK, so reading in the FT yesterday about how UK equities have started to take a bit of a turn for the positive, and there's a lot more institutional capital now flowing back, not totally, but flowing back into UK markets because they appear at a discount. So Mads, can you unpack that a little bit for us? And is there anything positive for us, for UK venture, for the startup ecosystem at all?
Look, I think there was so much upheaval in the UK political system, especially since 2016, that global markets have placed a bit of a discount on UK equities. And some of that has started to reverse. It looks like there's a little more political stability now, a little more of the don't do stupid stuff kind of mindset in politics. Hopefully that'll prevail. We'll see. But I think, folks are sort of looking at it and thinking, great, there's going to be some stability. We can actually do business. Yeah, maybe we're not going to like every single new piece of legislation that comes out. But as long as we can plan for the long term, that's good for business. And if it's good for business, it'll be good for investors. So I think the UK is maybe benefiting from some of that now. I think, conversely, the US has been a little bit overbought. There's been an AI bubble in some ways. We talked about it last week on the pod. The hundreds of billions that have gone into capital expenditure on building out AI for data centers, and people realizing it's going to take a lot longer maybe for some of that to be returned in the form of revenue and profit. than people were hoping for, meaning that it's, the markets are probably overbought. Some of the Magnificent Seven are probably overbought. And so we've seen the NASDAQ 100 tumble more than, about 5% here over the last few days, to the tune of about $1 trillion wiped off market cap. These are big numbers. I think the US I'm still hugely bullish on. I think it's probably just a correction here. We're seeing, and maybe it'll be a correction that goes on for a little bit, but I don't think it's sort of a systemic issue. I think it's more of a probably just a little bit exuberant. But I do think the UK potentially has some upside. What does that mean for UK startups? It's a much wider question. I still think in many ways UK startups, especially in our space, are more tied to the US economy than the UK economy. Because we sell to a global market. The companies are more likely to be bought by US acquirers than UK acquirers, and so on and so forth. So I think the US ecosystem is more important for our business than the UK. But that's a picture of today.
Maya, you're in Slovenia, and I'm assuming that you work globally. So you work with founders globally.
So whenever you are discussing UK ecosystem, my eyes shine a little bit, right? And I want to just suggest this idea. So in my region, I come from the Western Balkans, in case you haven't heard. There are a lot of really talented technical founders, world-class stuff. People are inventing really cool shit in B2B. And when it comes to capital access, it's more of this family versus full-on business agent style type of investment environment. So I am actively pursuing my teams to seek for capital investment elsewhere because it's better for their finance as well as for their business development. And I would love to ask you for some guidance how to just think about this, because I think what we did wrong as European ecosystem is that we are so damn fragmented, right? US is a huge market when it comes to investment, but here, if I have a competent founder, let's say from my region, they are doing what? They are shopping between Estonia, UK, Berlin, and a couple of other hubs. So are you guys working with other hubs or not so whatsoever?
Yeah, very much so. We look across Europe, bring them to the UK, polish, inject capital, and then they end up normally heading to the States because that's the direction of capital travel. And we are very, very aware that there are some incredibly smart people in the region. But where do they raise? Where do they build? Where do they sell? Where do they raise? What's the standard journey for the founders that you work with?
So they start building in some sort of technology hub or co-working in, let's say, Belgrade, Serbia. And nobody whatsoever have a problem incorporating outside these companies because it's very good for their legitimacy per se. And then you know how it is with technical founders, right? They are great at building products. So one of my teams I have been working with, they developed this cool knowledge graph system for supply chain tracking. I don't want to go into more nasty details, but shit is cool and it really works. And technology is brilliant. But then what happens if you send a technical founder to do some sales or LinkedIn on events? They will find another technical founder and they will discuss cool technologies together, right? But if your decision maker is CMO or somebody else, it's not the language that you would be speaking. So where help is absolutely badly needed is in value proposition, in defining use cases, and just developing sensible marketing and sales channels so that they can secure a good client portfolio. I actively encourage my founders not to launch in the region. Why? Because willingness to pay is shit. And here is a perfect market to think a perfectly good innovation just because you said, oh, we will use this for free and you will have our logo on your website, right? So yeah, these are maybe very specific problem sets, but hey, real problems from really talented people. I don't know what's your take on it, if it is the same in the UK, but yeah, this is the life that I have been fighting to improve.
Where do you suggest they go, or where do they end up registering their company? Where do they end up selling and fundraising? What's the standard trajectory?
Yeah, in the US they would be incorporating, and but when it comes to fundraising, so first are the private rounds and family offices. They are very
Locally,
lucky if they
that
could get
they're local in your region.
no, preferred from Switzerland or MENA region. So that would be like kind of a first bet that they would usually take. I think there would be a little bit of an imposter syndrome to approach Berlin or London financial sphere in the beginning. So in contrast, they probably don't have any connections there, right? And this is why that would be maybe wave two or wave three for them. But they would actually start by raising in countries that we feel are close to us. So this is maybe Estonia. This is maybe like if they are more ambitious, just like another tech center that we gravitate towards is Germany.
But I'm
Would
always
they?
intrigued as to where the region will head to raise. I think it's really important. But this going on to how you then help them with their go to market, because you've got a thesis that go to market for AI first products is different. Can you give us the how you see that?
Yeah, sure. So when it comes to AI, you know how majority of stuff is built, right? There is this guy who is working on something else, and then they have the idea that they could launch an AI as maybe a side product or something like that, right? So it's usually a part-time project for people who are already working with AI. So whenever they start thinking about marketing, things get a little bit awkward because the majority of these guys are introverts and they are absolutely against any sort of advertising and just communicating the product on socials. So there is one journey that I have been defining with these folks that worked, wait for it, Matt, repetitively well. So how to get the first 1000 free customers and let's say 100 active users from the numbers that I have seen so far. With the majority of the, let's say, part-time founders, builders of AI solution, this has been proven to be to just like first really harvest your phone book, right? People from your address list, people that you have already known, and you can send them either DMs or any sort of messaging. The second thing that you should do is to post in 5 social media groups that are relevant for your target audience. And in some cases, these are even Facebook groups. But nevertheless, there is the third lever that works predictably well for them. And this is just like to join forces with not saying influencer, because, you know, the B2B influencer is a little bit of a weird term, but with somebody who already owns this audience, right? And if you can get them to get into your alpha or beta and just like take them as your advisor, as your counsel, or just like a person who's genuinely interested in cool tech, they will support you. Your first job is to get 5 customers. Your next job is to get 100 customers, and then we can talk about scales and we can start engineering cool stuff.
Yeah, I remember seeing Brian Chesky talking about just get 100 people who love you. Just find 100 customers who love you. I thought that was pretty solid advice. Now, Mads, finally, we've got Revolut getting their UK banking license and what this might mean for UK startups. Can you unpack that?
I think it's super exciting that they're getting a banking license. We often talk about wanting to create more European champions, more great European startups that turn into global successes. I think Revolut has got a genuine chance of becoming such a company. Yes, the company's got its faults, it's got its flaws. You know, all founders are flawed to some extent. You know, we look at and marvel at what Elon Musk has done, but also, you know, look at maybe some of the, you know, we've talked about that in the previous pods, you know, some of his, you know, personality, maybe deficiencies or certainly traits. And I think Revolut it's an incredible company. They've grown really, really fast. They did $2 billion of revenue last year, and they're targeting $9 billion by 2026. So very, very rapid growth. Can they get there? You know, who knows? I mean, for comparison, Barclays has got about $30 billion of revenue. So there's still some ways to go until they can match the high street banks. But with the growth rates they have, it's not impossible that they could create, you know, really proper neobank that is, you know, meaningful, has a meaningful scale, you know, in global terms. And that's very, very exciting. It's taken them a long time to get this license. And I think to some extent, maybe some of that was self-inflicted. Maybe their controls were not as stringent as they should be. There were questions around KYC. But I also think it's really reassuring that they got the license now, because I think if we want the UK, if we want London to be a powerhouse of startups, we've got to build some of these champions, and I think Revolut can become that. So I think it's very, very exciting. I think they've shown the way of what can be done in fintech and in startups in general, and hopefully it'll inspire others to really aim big and go big and try to create global champions. So this is not the end of the journey. There's still a lot more ways to go, but I think it's such an exciting step on the way.
Yeah, great. Putting Europe a little bit more on the map. Maya, have you played with? Are you buddies with the, maybe through crypto? You're buddies with the Revolut guys?
The prices are not very good. We have other
Oh,
exchanges
I
that we
see. Not
utilize.
not
No,
friends
but
with Revolut.
nevertheless, I do have like the funniest story when it comes to Amazon, right? So, when I launched my book, I didn't want to turn my company into a shipping company. So I definitely did not want to have thousands of copies in my basement and sending them through a local post office. So I went on Amazon Print on Demand. And this is a really interesting story regarding the payment system. So you get transfers from Amazon from each and every different marketplace, right? So Amazon Japan would send you money, Amazon Brazil would send you money, and there are approximately 20 transactions that you get. My stupid local bank charged me 20 euros for each transaction that I've got. I was just like calling my local bank as crazy and like, this is bullshit, guys. I mean, you can charge me once. And the lady said back, yeah, you should arrange with Amazon that they send you one payment because we cannot work against bank rules.
Oops.
I switched to Revolut in a heartbeat, Revolut Business, because like I paid this fee, which is like maybe 40 or 60 dollars as a business, and all my problems with financial, let's say, currency transactions, because I also receive money from Switzerland and stuff like that, are gone.
Now, payment rails is definitely something being shuffled and improved as we speak. But listen, guys, thank you so much. That's the end of the seed this week. Thank you for listening, and we'll see you next week.